Welcome to the deep dive. Today we're tackling Spero Therapeutics, ticker SPRO, and their Q2 earnings. It's a really interesting one.
Yeah, definitely. You've got this big clinical win, financials looking better, but then the market reaction.
Exactly. Stock dropped 18% right after. So we're going to unpack that paradox. What's really driving the value here beyond just the headlines?
It's a great case study, really. Shows that mix of, clinical success, some strategic shifts, and how the market tries to make sense of it all. We'll hit the numbers, the drugs, the strategy.
Okay, let's kick off with those financials then. Spero reported a strong Q2, beat expectations.
Yeah, the GAAP EPS was negative $0.03. Analysts were expecting negative 77 cents, so that's a huge beat, like $30.54.
The revenue looked good too.
Very solid, $14.2 million. The consensus was around $11 million. Plus, that's up 39% from last year.
Okay, so better earnings, better revenue, and the bottom line loss improved dramatically, didn't it?
Oh, absolutely. Net loss was only $1.7 million. Compare that to $17.9 million this time last year. Big swing.
What drove that? Lower spending.
Partly, yeah. R&D expenses dropped quite a bit, down to $10.7 million from nearly $24 million.
Yeah.
They're being more disciplined.
And that discipline plus some other factors really helped their cash situation, right?
Definitely. They had $31.2 million in cash at the end of June. But then, crucially, they got a $23.8 million milestone payment from their partner, GSK, in August.
Ah, okay.
So adding that in, they're now saying their cash runway extends well into 2028. That's a long way out for a biotech this size.
Huge. Mitigates dilution risk significantly. So you've got beats on earnings and revenue, much smaller loss, cash into 2028. Sounds like a recipe for a stock surge.
You'd think so. And initially, right after the press release in aftermarket trading, it did pop over 7%.
But then the next day?
Yeah, the next full trading day, SPRO shares fell 18%, dropped from $2.36 down to $1.94, and volume spiked like 4 times normal.
Okay, so that's the paradox. The market saw the good news, maybe took some initial profit, but then really dug in and sold off. What were they focusing on?
That's what we need to figure out. Suggest investors were looking past the headlines, maybe at execution risks or pipeline issues.
Right. Let's dig into the science first, though. The biggest positive was Tebipenem HBr, wasn't it?
Absolutely. The star of the show. This is their oral carbapenem, powerful antibiotic class for complicated urinary tract infections, cUTI.
And the big news was the phase 3 trial, PIVPO.
Yeah, they stopped it early. But not because it wasn't working. They stopped it because it was working. For efficacy. That's pretty rare.
Wow. How did they determine that?
They had an independent data monitoring committee, an IDMC, do a planned look at the data from almost 1,700 patients.
Okay.
And the IDMC concluded Tebipenem HBr was non-inferior to IV imipenem cilastatin. That's a standard intravenous treatment.
So the oral pill worked basically as well as the IV infusion. That's a big deal.
It's critical.
Yeah.
Validates the drug against the standard of care, but in a much, more convenient form.
And safety. Any red flags there?
Encouragingly, no. The IDMC didn't see any new safety concerns. The most common side effects were things like diarrhea and headache, which they'd seen before.
So if this gets approved, what's the impact? How does it change things for patients with these nasty UTIs?
Well, here's the kicker. If approved, this could be the first oral carbapenem available in the U.S.
The very first one.
Yep, that would be a major clinical advance. Think about it. Instead of needing to be in the hospital for IV therapy, patients might be able to take a pill.
Huge implications for hospital burden, costs.
Exactly. cUTIs cost the U.S. healthcare system over $6 billion a year. An effective oral option could shorten hospital stays, free up IV resources, maybe even help combat antimicrobial resistance, AMR, by providing a targeted oral option. It's potentially transformative.
So what's the path to get it approved?
Seems pretty clear. Spero's partner, GSK, plans to submit the NDA, the new drug application, to the FDA in the second half of 2025.
Okay, so next year.
Right. And then they're expecting FDA action sometime in the second half of 2026.
Is there anything that helps smooth that path?
Well, they do have a special protocol assessment, an SPA, agreement with the FDA from back in 2023. That can sometimes help streamline things, provide some clarity on the trial design the FDA agreed to.
Even if it ends up being for a limited use indication, I saw that mentioned.
Yeah, that's a possibility.
Yeah.
The SPA was for cUTI, including pyelonephritis, potentially under a limited use pathway. That might restrict how broadly it can be marketed initially, focusing it on specific patient populations where the need is highest. That could be one of the things the market was reacting to.
Oh, okay. So maybe not a blockbuster right out of the gate if the label is tight. Let's talk about that GSK partnership more. How important is that?
It's absolutely central to Spero's strategy. GSK has the license to develop and sell Tebipenem basically everywhere except Japan and a few other Asian territories.
And Spero gets money from that.
Yes. They're eligible for up to $351 million in milestone payments based on development, regulatory progress, and sales.
Including that payment they just got.
Right. The $23.8 million they received in August was one of those. And there's another $25 million due when GSK actually files the NDA in the U.S.
So that's significant cash coming in without selling more stock, non-dilutive funding.
Exactly. It's crucial for them. De-risks the financials quite a bit, lets them focus on getting Tebipenem over the finish line.
And we saw how that links directly to the cash runway. Stopping the trial early saved money.
Right.
Fewer clinical expenses.
And the GFK milestone payment came in, boom, cash into 2028.
That's the combo. It dramatically reduced their near-term need to raise more money, which investors always worry about with biotech.
And the CEO, Esther Radavolu, who's also the CFO, talked about how they're thinking about spending that cash.
Right. Yeah, during the Q&A, they were clear. Priority number 1, 2, and 3 is getting Tebipenem HBr approved. That's the main value driver.
Makes sense.
So decisions about other things, like buying other assets, expanding the pipeline, that's all on hold until they have a clear line of sight on that approval. Very focused.
But maybe a bit reliant on that one horse. That's the potential downside. Especially since not everything else in the pipeline went well this quarter.
Right. Let's touch on that. SPR 720, what happened there?
Yeah, that was the setback. SPR 720 was their oral drug candidate for NTM-PD, non-tuberculous mycobacterial pulmonary disease, a different kind of lung infection.
Yeah.
They put the program on hold late last year. The interim look at their phase 2A study, well, it didn't meet the primary endpoint. Didn't show enough difference compared to placebo.
Huge.
And there were also some potential safety issues. 3 patients in the high-dose group had reversible liver toxicity grade 3, so not ideal.
So they're pausing development.
Essentially, yes. They're looking at the full data now to figure out if there's any path forward, but for now, it's suspended.
Which definitely narrows their options near term.
It does. It puts almost all the eggs in the Tebipenem basket, and maybe that lack of pipeline diversification is another reason for the market's negative reaction, especially if Tebipenem gets that limited label.
Okay, so tying it all together, we've got this clear win with Tebipenem phase 3 success, potential first-in-class oral drug, finances look much stronger, cash into 2028, but the market tanks 18%.
Yeah.
So the potential reasons we've discussed, maybe it was just sell the news profit-taking after a run-up,
Could be part of it.
or maybe investors are really focused on the remaining hurdles, getting that FDA approval, the scope of that approval, that limited use concern.
That seems likely a big factor. What's the actual market size going to be if the label is restricted?
And then the pipeline thinning out with SPR 720 suspended adds to the risk profile.
Exactly. Less optionality. Makes them very dependent on Tebipenem's regulatory and commercial success. The market seems to be saying, great science, but we see execution risk and maybe a smaller initial market than hoped for.
So the narrative shifts. It's less about can the drug work and more about can they get it approved smoothly and launched effectively by GSK.
Precisely. The focus is now on execution. Key things to watch are that NDA filing in the second half of 25, then FDA acceptance, probably as late 25 or early 26.
Any other catalysts?
Yeah, look for presentations of the full POPO data at conferences, maybe an FDA advisory committee meeting or AdCom down the line that would give more visibility. And, of course, how the commercial planning with GSK progresses.
It really highlights how biotech investing works, doesn't it? Even a home run trial isn't the end of the story.
Not at all. Clinical success is necessary, but not sufficient. Regulatory hurdles, market access, commercialization, it's a long road.
How's this volatility playing out against the broader biotech sector? Is SPRO just getting hit harder, or is the whole sector shaky? You mentioned the XBI ETF.
Well, the XBI has actually been okay recently, showing some positive returns over the last month and 3 months.
But SPRO hasn't followed that.
No, SPR has been much more volatile downwards in that same period, down like 22% over 1 month, 29% over 3 months, even though it's still up significantly over the past year, about 38%.
So it really shows that company-specific news, these binary events like trial results and regulatory pathways, they can completely dominate the stock's performance, regardless of what the wider sector is doing.
Absolutely. Spero's story right now is all about Spero, not so much about the general biotech climate.
All right, let's shift gears. Time for our This Is Not Financial Advice segment. Purely thought experiments, like pitching ideas internally. How might someone try to play this situation?
Okay, disclaimer firmly in place. Given Spero's situation phase 3 win, path to market seems clear, even if potentially limited initially. Cash runway is solid, but the market just whacked 18% off the stock.
Right. Seems like an overreaction on the surface, maybe?
Potentially. So, trade idea one,
Yeah.
maybe look at something like long-dated, out-of-the-money call options, target and expiry well into 2026 after the expected FDA decision date.
Okay, why options?
Leverage. It's a bet that the market has overreacted to the limited use worry and the timeline risk. If FDA approval comes through reasonably clean, especially for a first-in-class oral like this, the stock could re-rate significantly higher. The options capture that upside potential.
So betting on the eventual value recognition overpowering the current skepticism.
Exactly. Betting that the clinical significance eventually wins out once the regulatory path is cleared.
Okay, interesting. What's another angle?
Trade idea two. A pair trade. This is more about relative value. You go long Spero, either the stock or maybe shorter dated calls this time.
Okay.
And at the same time, you short a basket of other small biotech companies, specifically ones that have, say, much earlier stage assets, weaker pipelines, or much shorter cash runways.
So you're betting on Spero relative to weaker peers.
Precisely. You're saying, okay, Spero has its risks, but they have a phase 3 success, a major partner in GSK bringing cash and expertise, and runway into 2028. You contrast that with companies facing more uncertainty, higher dilution risks soon, maybe more sensitive to general biotech funding drying up.
So it isolates Spero's specific strengths, the de-risk asset, the partnership, the runway against broader sector risks or the weaknesses of specific competitors.
Right. It hedges some of the market risk while expressing confidence in Spero's relatively stronger position compared to that selected peer group.
Fascinating couple of ideas there. Again, purely hypothetical exercise.
It's absolutely not financial advice.
So wrapping up our deep dive on Spero's Q2. A major clinical win for Tebipenem HBr, financial strengthened significantly, but countered by a pipeline setback with SPR 720 and a market reaction that seems laser-focused on future regulatory risks and potential label limitations.
It really is a compelling story. A reminder that great science is just the first step. The market is constantly looking ahead, weighing risks, and trying to figure out the commercial reality, not just the clinical potential. Spero's next chapter is all about navigating that FDA process with GSK.
It leaves you wondering, doesn't it? When you see a potentially groundbreaking drug facing this kind of market skepticism despite strong data, does it signal a genuine flaw the market sees? Or is it sometimes an opportunity created by short-term fear, overlooking long-term patient impact? Something to think about.
Indeed. And remember, all this discussion is for educational purposes only, definitely not investment advice. Thanks for tuning in to this deep dive.
We'll catch you on the next one.